The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome all to another excellent edition of the Power Trading Hour. Since we're not going to be doing the Power Trading Hour, the Tech Insider tonight, we've got a special presentation from Basil for between the 4 and 6 hours tonight. We're going to do a little bit more Tech Insider stuff during today. But as always, we like to start off with what was happening today in history. In 1512, Michelangelo finally completed his work in the Sistine Chapel, and it was opened up for the world and even the dregs of society to wander on in and take a look at it. It was probably at that time, probably like Aborigines coming in and watching high-def TV. Mostly everything was dirty and filthy and covered with bovine excrement. If you watch any of the movies of that period, not a lot of clean people out there. Unless you were the king, you were probably pretty filthy and dirty and probably had warts and all kinds of stuff. So to come in and see such a amazing place, especially if you'd never been off the farm, which a lot of people hadn't been at that time, or into a big city, would have been probably about as amazing as going for the first time to see the pyramids in Egypt or something else like that. I can imagine in 1512, boy, was that an e-ticket ride. Of course, the most famous of these paintings, if you've never been in there, is the creation of Adam, a painting which the arms of God and Adam are stretching toward each other. But this day in 1512, wow, 500 years ago today. So, pretty amazing. So what do we have going on in the market? Pretty much what I was hoping for, which was a light volume move up in the market. Volume a little bit better than one would think. 2.3 billion shares for a Friday. Still probably not enough to really push this market up. We are getting into the last days of fund buying, and that's probably going to go on until Monday. And I think at that point we're going to see something happen. Markets were down earlier today. They really took a kind of a little dive when the numbers from China's industrial production and some of their other numbers came out slightly, or I'd say slightly after the European close in the markets at 12:30. Market started to recover. And, of course, I think daylight savings time is this Sunday. And am I not mistaken? Maybe somebody in the den can tell me. But I'm pretty sure that it's the change between European closes for their equity markets and the U.S. markets is only 1 week in the fall, but 2 weeks in the spring, if I remember right. But maybe someone will correct me. But I think it's this weekend. Pretty sure, isn't it? Anyway, we're going to get to some of the other stuff, but we're up 3-4 points on the S&P, 3 points on the S&P cash. Oop, let me update that actually. That was as of 15 minutes ago. Let me go back here and look at it. Yeah, still the same. Up 3 points. Nothing much changed. 2.3 billion shares. So volume a little bit better than you would think, and of course, fund buying through today, probably tomorrow. We'll get into some charts later in the day. Had some emails, and I'm going to try to answer some questions. I've kind of semi-answered them, and I don't think I've given a great enough discussion about how indicators work, and especially things like Gartley's. If you're just always taking them, you're probably going to lose, and we'll explain why, and we've done it before. You need the broad markets, you need the sector you're in, and you need the stock to give the same signals altogether. Anyway, you can always give me a call at 877-927-6648, 827, no, so it was 877-927-6648, if I can remember it. Okay, in technology, I'm going to be covering this in the Tech Insider today. I'll have a link in the newsletter. It'll be out probably later today. I'm watching for the market close out here to see if there's any action necessary. If you're watching on Tiger TV or in the Den, these pictures are going to be hard to see. But what they are is a cell phone, and that cell phone, imagine the display not ending at the edges, but where it starts to round over to come over to the back of the cell phone or the smartphone, that the images could continue on wrapped all the way around the edges. This is called side roll, and there's been a lot of discussions about it in the technology circles. No one's actually shown anything until this week. There was a display technology conference in Japan, and a company working with Sharp has shown this for the first time. I've seen pictures of it. I've never seen actual rolling video of it. The idea, though, is that the edges of your cell phone will now become as useful as the front of your cell phone, giving it a little bit extra space. If you can see in my pictures here, they've put additional buttons, much like you'd push on the surface of your smartphone, along the edges of it. Some of the other features of this, what is known as side roll, is imagine the ticker in Times Square for the New York Stock Exchange and the NASDAQs. They've got like scrolls going down the edges at the top. Normally, where you wouldn't have a usable space, they've got announcements like you've got mail, other things, but very interesting technology. Of course, we've seen the first curved smartphones. These aren't kind of curved in the opposite way. When you get to the edges, they just wrap right around. The idea is that you would be able to use more of your smartphone surface in smaller devices. Of course, a lot of news going on in that field, and we're going to talk about that a little bit. But probably one of the most interesting things, I've been waiting for this because it's really going to be interesting to see. Part of the other idea is that by using these, they're going to get rid of more and more buttons until there are no buttons left on your smartphone. Everything is going to be a virtual button that you click on with your finger. There won't be a hard button. Right now, you even have things like volume up, volume down on the sides, turn on, turn off. All those things will eventually go away, and you will have a smartphone without any hard buttons, just the soft buttons displayed on the device itself. And you'll have probably a reset button on the back of the phone that maybe you have to poke with a paper clip end or something like that. But they're working harder and harder. The actual video of this is extremely impressive, though, so just keep an eye on it. What is very important is the Nexus 5. And one of the things about that is that it has a new version of the operating system. For those people that are not familiar with Google and Android a lot, each version of their Android operating system gets a code name. In this case, it's called KitKat.
1, 2, 1, 2, 3, 4. Give me a break, give me a break. Break me off a piece of that KitKat bar.
Yes, the old KitKat bar. Everything's named after a candy or ice cream or something like that, a dessert. At the Android Google headquarters. Probably what's most interesting about this phone is that it is a very, very hot phone at a very, very good price. $349 off contract. That means you can walk right in, buy the thing without a contract for $349 for the 16 gigabyte version and $399 for the 32 gigabyte version. This is already sold out in the first night it was out. A lot of people have been waiting for this new version, which is also known as 4.4 Android. There's no more 8 gigabyte versions. It's actually more expensive to put in 8 gigabyte memory than 16 gigabytes of memory now. And they'll push for the upsell to 32 gigabyte. Now, why is, besides the phone being smoking hot and probably living up to everything that Apple's is doing now, it is cost significantly less than the Android flagships now, like the 5 from Samsung, but even the iPhone 5C. So you have a premium phone at a very decent price. But that's probably not the end of it. A lot of new features in this version of the operating system. Probably the most important, though, is they've put this. They put the operating system on a diet. Normally, year after year, you keep adding things, and the software gets larger and larger and larger. It's called bloatware. It just slowly gets bigger. What they went in and put the operating system on a diet, and this works even good on phones with 512 megabytes of memory for the operating system, which is pretty much unheard of. So actually going the other way, when you listen to Google, what they are saying is they're pretty much seeing a glut of high-end, what are called in the industry super phones, the hottest phones with the most features. That market is slowing down. And what they want to do is take the people the billion people that have a regular cell phone service and try to move them up into the smartphone market. They're thinking that a decent phone that is extremely cost easy for these new smartphone features are going to be necessary. So they have an operating system that will work on very, very inexpensive phones. Read China. And kind of a good reason and tangential has been Bloomberg interviewing the CEO of Baidu pretty much all this week. They must have done it over the weekend, paired it out all week. But one of the questions the interviewer in Bloomberg asked the CEO of Baidu was what Google said about China. And that was that the deck was rigged from the get-go and that Google was never going to be able to go up against any company there, that they were protecting themselves fairly extensively, and why Google backed out of the China market. But for the same part, Google is doing well with their Android operating system in China. So that they are changing that. But for as far as search, they're saying that the deck is rigged, and they really can't do a whole lot about it. They're going to try to make some money in it. The most interesting comments are about whether or not Apple will ever be successful in the Chinese market. According to the Google guys and the Baidu guys, probably not. We will be back right in a few minutes. Give me a call, 877-927-6648.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we talk about cell phones and tablets, what we're finding out, and we'll see if this changes across the next 2 months, but Apple, if they had a real weak spot, it has been tablets. What we do know is the numbers are in now for the tablet marketplace, and Apple has seen for the first time their market share drop below the 30% level of market share. To give you an idea, in this quarter last year, they had 40%. They now have a 29.6%. I suspect, just as we talked about, I think almost in the first shows with Tom O'Brien when we were doing the Tech Insider, we were talking about just how fast Android was coming along against Apple. In an entrenched position that Apple should have been easily been able to defend against, but chose not to. Anyway, down to 30% when, of course, at one time they owned 100% of it. Other kind of interesting news is just how many units Samsung has sold of the Galaxy 5. And it is pretty amazing. They are over 20 million units. The new iPhone 5S is about 25. So why not quite up to Apple? Again, Apple makes, what, 3 phones? Samsung makes 50. Still a huge difference, but more than anything is this marketplace where we're looking at tablets and the huge market share dive that Apple is having in this market. It is going to be troubling to say the least, but my thoughts are this: is you're really going to have to pay $350, $360 to actually get in to an Apple one. Maybe Amazon's belief that pricing the tablet at $140 and shoving everybody into your ecosystem to buy things may be the better marketing plan in the future. And, of course, there's a lot of downside to getting one of the Kindle Fire HDs, but $140, a lot of people are just going to swallow their pride and go on with it. To get to $350, $360, buys you a hell of a 10-inch Android tablet. And, of course, we're going to be looking at 12-inch tablets here very closely in probably in the next three months, I would imagine. But hopefully, if you're watching on Tiger TV, I've got this chart up that shows all the percentages of what people are doing from IDC worldwide, and they just they do a pretty good job of checking exactly what is selling in the marketplace and what isn't. Yeah, there's part of the idea that market share, but Apple actually has increased their prices on some items in the tablet line to make sure that its margins stay higher. I think they've gotten to the point now, actually it was a question or a statement in the den, they've gotten to a point where they don't want their margins to drop anymore. They believe that they're going to be a premium product like a Ferrari, like a Bentley, and you don't go in and try to edge them down on price any or talk them down. So even some of their prices are going to be yet a little bit higher. I think that they're willing to give up or concede market share now for holding the line on margins to a great extent. But when we're looking at Apple, in fact, we'll get to it, I think, after the break. But this thing, it was in a very big danger. You'd have a very big signal on Apple. What do we have here? Let me update this thing just to make sure. With a close on Apple below $513. Actually, I think it's $513.74. We'll take a look at it. But this thing's down to $517. Not beyond the scope of reason. This thing would close today below $513. We're going to talk about a market when we get back that is in peril, and we'll show how maybe you're going to use Gartley patterns and when to use them. And I think I've got something that'll help at least a couple of people that have emailed me out on why you just don't trade Gartley's independent of the broader marketplace out there. Again, you can always give me a call, 877-927-6648, 877-927-6648. But we'll be back in just a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And as we come back, we were going to talk a little bit about trading different patterns. And it seems like I repeated a lot, but it seems to go either over everybody's heads that is listening, or at least some people. Let me not paint with too broad a brush. Many people, especially newer traders, and that is we talk about individual patterns. And those patterns, at least my model and most of the model of people that mathematically try to tackle the market, see that the direction of a stock pretty much 50% of the time is going to move with the broad indexes themselves. About 25% of a stock's movement over time correlates to the sector it's in, and about 25% is put back in as the special events that are affecting a single stock. So you've got, of the 100% correlation with various things, 75% of it doesn't have anything to do with that specific stock most of the time. If you're trading patterns like bearish Gartleys and the market is rising, you're going to have a very tough time. Those bearish Gartleys or bullish Gartleys, either one, are going to be 75% dependent on whether or not you get the call on the sector and on the broad markets correct. So what can you do to make sure that you have a good idea of when to time the markets? And especially newer traders, can look at something that is called the summation index. Gentleman that came up with it, this has been around since probably the 1960s, and as a broad measure of market movements, not small movements, but large movements of the market. This guy came up with a thing called the oscillator, McClellan oscillator. His son now runs the show and pretty much follows basically what his dad taught a long time ago. There's not a lot of mystery to this thing. It is an advanced decline ratio oscillator. So every day that you add a new number to the fray, which is how many advancers there are, how many decliners they are in the New York Stock Exchange. There's one for the NASDAQ, and maybe we'll show that before the end of the day. But if you want a link to these, you can always email me at path, that's P-A-T-H, at TFNN.com. But there's nothing like the summation index out there. In fact, it stood the test of time, and that is very long time movements in the marketplace. Also, it is an excellent indicator of when there is divergence. We'll get into that in a minute. But basically, you've got an oscillator. This oscillator actually is at the bottom of the screen. I'm going to move it. This thing is wickedly moves up and wickedly moves down. For the most part, you can kind of try to see whether or not you get a crossover between what they call the 5% index and the 10% index. Probably not a lot of stuff that you need to get into mathematically. All it is a average of a shorter time span against a larger time span. And when these things cross back over, theoretically, you're going to see a change of how many stocks are opening and closing higher or lower. So not a lot of mystery. At the end of the day, you can go to any website. I think I actually popped one up here. Is it here? There, it's there. Oh, I've got it on another tab. Here it is on Yahoo, which is just the advancing issues versus the declining issues. And then, of course, there's stocks that were unchanged on the day. But normally there has been 2,700. We're almost getting up to 3,000 stocks on the New York Stock Exchange tape that are listed. Actually, it's over 3,000 now, interestingly enough, 3,100. What we do know about that is that because of indexes having, especially like the NASDAQ, where you get Apple being 15 or 20% of an index, does that really represent what the entire marketplace is doing? And the answer is no, it highly skews it. So what you find out is over time, are more stocks closing higher or closing lower? When we go back to the summation index and that oscillator, what they found out was that it was kind of interesting, but it was way too violent to ever trade. So they decided to average it out, and that gives you what's known as the summation index, or the McClellan summation index. So if you were going to pick times and wait for great setups, ideally what you want to do is wait for this thing to either turn from going down to going back up, or from going up to going back down. Yesterday we got the first tick. So we're going to be watching these markets very closely for the advanced decline lines to go back and figure out whether or not you would want to. Now, let's say that we've got a tick down in the New York Stock Exchange. Now we start looking at sectors that we'd like to be in. Then we start looking at stocks. So if we see a whole bunch of Gartley patterns in a certain sector, hey, we need to look at that sector a little harder. But getting a whole lot in a certain sector is probably telling you something already. And we've been seeing some in a very specific sector that we've been talking about in my daily newsletter. But when you start seeing more stocks close lower than stocks closing higher, good indication that maybe that the index is not yet topped out, but the stock market as a whole is headed lower. You can put these up. In fact, if you get a link, normally they put the summation index right over the New York Stock Exchange index. And you'll see how well it works, especially when you look at highs where the participation is much less than it was at previous highs. So let's say you tag 2 highs in the New York Stock Exchange, and you have a level of 1,000 the first time and 500 the second time. The numbers are not so much important as the fact that we can see that there wasn't that much participation, and the participation was weak in the second test. That lets you know that very few amount of stocks are driving the market instead of a very broad market. And we've had pretty much this last big run just getting us back up to the problem child area of around August. And it's not really given us a whole lot, especially with the movement we've had in the market. The crossover is the place where you probably get the confirmation to add that signal. But if you are looking to trade and you're a newer trader out here, take a look at the summation index. It sometimes will get you in late, but what it will do is keep you out of long runs like we've had since what was it, the middle of October, where this thing turned back up. You shouldn't be expecting big failures. Now, this is an excellent opportunity to come back and see huge failures. Actually, I'm going to show you up here. What you can see is that the market rolled over pretty much when you probably got a pretty good indication by about 3 or 4 days on the summation index on the actual broad markets. But what you should start seeing after they hit is normally 3 or 4, 5, 6 days where it doesn't move down very much. I'm kind of trying to show it to you with the mouse pointer here. And then basically everybody gives up and it goes to hell in a handbasket. And you can see what happens when you go down and make major lows. Everybody wants to sell stocks. All of them are tending to close lower en masse. But a lot of people say, well, the markets are going where the indexes are. And I say the market is going where the majority of stocks are. Even if you get one big stock like IBM or a Netflix, it's easy to see those drive, a single stock drive an entire market. But what normally happens is when that stock fails, you find out just how weak the entire market is. But keep an eye on the advanced decline line. Not too bad. What else do we have going on out here? Pop back up a Apple chart. We were talking about Apple closing below that 1374 range, and this last drive up for Apple, not a lot. It got right to a gap at 540. It's pulled back. What you have to really be reticent of is a close below 1374 on this, and I can see it happening, and it would be for several reasons, but I think the most is that maybe we're starting to see signs that the superphone market out there is starting to run and be a little bit glutted. People are spending $500-600 for new phones, even if it's hidden in a 2-year contract, maybe coming to an end out here. You get to a saturation point. Maybe people have had the most expensive phones out there. No big deal to them anymore. Anyway, we've got some other notes out here in the tech world. Wanted to see if I find a few of them out here that were interesting. We talked about yesterday Google's giant glass stores. At least that's what I thought they were. And again, it looks like these things are being confirmed as Google Glass stores. These things were probably a little early. The Google Glass, which are those glasses you've seen everybody wearing on TV acting like morons on, looks like this thing is going to be a giant party house for the launch of Google Glass. And as I thought, all these little offices, or kind of like offices in these giant facilities floating around in the San Francisco and Portland Bays, and soon to be in the New York Harbor for probably at Christmas, maybe in January, are going to be ways for all the developers to show off all the applications they have for Google Glass. So it will be interesting to see if there's anything else out here. Let's see. Google Glass. See if there's anything else out here. A little more follow-up with Time Warner yesterday. I think I said 350,000 subscribers were lost in the war between CBS and them, and getting cut off. It's actually 305,000, so I thought I'd correct that, but still a whopping amount. See if anything else is going on out there. Well, no. So let's look at a few more charts. See if there's anything in my podcast list. The NASDAQ has been or was halted in trading in its option market once again today. This is the second time this week. I noticed that the shooting in LAX has taken over everything, and no one's really bringing it up. But I'm really starting to get rather nervous about the ability for NASDAQ to continue operating out here if it's 1 week after another that they're having another halt in either its options or its dissemination of actual quotes or a bunch of other stuff. Other things in my stack of stuff out here. Of course, Halloween last night. Pretty interesting that the attorney representing MF Global customers on a pro bono basis was dressed up last night as a broker-dealer, John Corzine. A little bit. Boeing, let's take a quick look at that. BA. Boeing up pretty much at its highs again. This is actually had a stronger leg on the last leg from 113 up to this 131 leg up here today. Maybe getting close to topping out, but kind of interesting that they are actually accelerating its 737 production and no end to keeping this thing rolling from back at 76 where it went to 73 on talks of it having problems with its lithium-ion batteries to $131. Kind of hard to yeah, sorry to hear that, Z. But you probably at least like they're poking fun at it. One of the guys in the den is talking about having $500 in a dormant account at MF Global. Probably the more interesting part of that whole thing is their private lawsuits against Corzine, and he's actually sold all his stuff. He's getting very tight and very narrow, so he can't be, or it'll be very hard to get any cash out of him. But one thing he will not be able to avoid over the coming years and months is going to be depositions. They're going to be able to ask any question that they want, and he will not be, since the statute of limitations is run out on it, he will not be allowed to not answer those questions. We're going to find a lot of things out from these lawsuits against Corzine and MF Global, so we'll find out. Be back in just a minute.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Yes, it was Sanford and Son. What a great, I love that show. I had no idea what Fred Sanford was actually like until I went and saw him. It's not real name, of course, not Fred Sanford, but saw him one night about 1 or 2 o'clock in the morning in Las Vegas, and walked into his show, and it was very enlightening. Probably about 100 people there, and I don't know what he was doing there. He came out, did about 5 minutes, said something about how we should, something about fornicating and our mothers, and walked off, 5-10 minutes into a 1-hour show, and that was it. And all of the people were at the front gate were trying to figure out how to give us our money back, and that was it. But I think probably found the dirtiest man alive at the time. I'm pretty sure he's not there anymore. His name's Red Fox, of course, but always interesting. But oh boy, was he an angry guy. I don't think he liked seeing computer people in at 1:30 at the 1:30 show. I think he enjoyed a bunch of drunk gamblers out there. Anyway, Hewlett Packard, HPQ, keeping an eye on this one, especially in the technology sector. As we look at this stock, kind of giving an idea on whether or not this thing's going to be able to have any juice left in it. Came down on heavy volume. Let me zoom in here for everybody. Heavy volume on the 22nd of August. Is that right? Yeah, 22nd. Yeah, 22nd of August. Basically 67.7 million shares. It's been coming right back in, trying to fill this gap over a period of days, going sideways. A little bit more piercing today. 16 million shares. This thing really hasn't been out there that much. And, of course, got a decent move off the bottom. Things getting a little bit better. But my guess is this thing's probably in a trading range between that $20 level and $25, if it can make it to that. I don't see a lot of juice in this thing or a lot of changes in the company. Changes in this company are probably not going to come till at least into the second quarter of next year. And I think just an improving market has helped HPQ. They've got a good CEO with Meg Whitman, and she's making changes. It's just this is a big ship to change spaces. Looking for other stocks, and especially in the housing market, to give us some kind of a signal, and going to be tough out here. Looking at some of these new high flyers like Trulia and Zillow to give us an idea about whether or not advertising in the space for what would you say? Advertising space for housing is going to give us any clue out here. One thing that I find very interesting out here is in Trulia, TRLA, is this thing gapped up with a real strong volume on the 1st of August with 3.7 million shares. The volume is not, it's still half. But we are back in this lower range, got to 38.85 today. So you could say, at least on volume for the gap up, it was better, but it doesn't really look like there's, yesterday's volume down, today's volume down, looks like there's trouble. So we're going to go out and look at Zillow. Same kind of thing. You get a strong move up for a gap, almost the same time frame, 1st of August, 1.35 million shares. This one actually came down with heavier volume on October 9th, 1.9 million shares. Oh, see you Monday. Same bat channel, same bat time. We're almost out. See you then.
Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book introducing the Chapman Wave methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.